Hello, thank you for joining me today. I'm very excited to be talking with Richard Thierry of Welcome Home Funding today. My name is Antoinette Sullivan. I'm a realtor with Better Homes and Gardens Real Estate here in Antioch. Today's conversation will cover how to buy a house with down payment assistance, some specific programs available to you from Welcome Home, and what the benefits are and who can use the programs. Today's guest speaker is Richard Thierry. He is my friend and business partner. And Richard is very used to using down payment assistance programs. He and I have helped many families in the past reach their home buying goals with the use of these. And as you can see here on the screen, he's used most of them. And some of these might be familiar with some of you watching today. And not only is he a great lender, he's been married to his wife for nearly 30 years. And he is lovingly referred to by his grandson, Noah, as Papa, and a designation that I'm sure he is proud of. And so without further delay, I'd like to bring Richard in. And so thank you, and please join the conversation already in session. Thank you.
The stability of being a homeowner and the fact that there is no better satisfaction of someone knocking on your front door and you're not worrying about them telling you that your rent is due or that the house has been sold from under you or there's some sort of violation. And just having the pride of ownership has really been a really passionate thing that I've had for now over 21 years, as you saw in my bio. So first I want to say thank you to you, Antoinette, for giving me this opportunity. We won't be long at all today. Antoinette and I, our goal here is to not overwhelm you with information today, but more so just give you the tidbits of what and how these programs function, and then ultimately have you reach out to us directly and perhaps set up some one-on-one meetings or one-on-one Zoom or whatever the case may be. So without further ado, let's go right into it. It's all about what's available and what programs are out there. There are several, obviously. Very many are out there, and I have touched on a lot of them, but I've really honed into just two on today. A lot of them have gone by the wayside based on the economy situation right now. So we're going to just focus on the two that Antoinette mentioned at her outset. Here's our agenda. It's a very short one. Why use assistance? That seems like a rhetorical question, but it's a very valid one because not all help is good help, as we have heard in the past. What is down payment assistance? Some people are quick to call a grant, for example, down payment assistance. That's different, really. A grant is money you keep forever, where down payment assistance typically is a loan. And then we'll get into the what is a gift and more specifically what the home funded program is. The Q&A, Antoinette and I will pretty much address when we get to that location and just kind of see where we are and how we want to deal with that. So why use assistance? Well, I'm sorry about the elephant in the room. Maybe you didn't have enough money. If you didn't have enough money, it does take money to buy a home, whether it be a loan or whatnot. It is a reason to use assistance, right? So then once we pass that, which is a quick yes or no question, do you have your own money? No, I do not. Well, then you need assistance, right? And then we go into who is eligible. And so then a person will say, well, another reason I used it was because I'm eligible. It's interesting, you guys, because I do home loans for people who do have quite a savings. And my angle to them is keep your savings. Frankly, I refer to a savings as sleep at night money. You know, it would be nice to put down $50,000 on a home and lower your monthly payment, which, by the way, doesn't lower it very much. I have a simple formula. About $5 per thousand is what you can see on the change. So a guy puts down, $5,000 more, he has then only lowered his monthly payment by $25. I'm sorry, I would rather have the $5,000 in my bank. So some people will use it because they're eligible and not necessarily that they needed it or not. All right, moving on. So what is down payment assistance? I intentionally have the link here to the down payment assistance program that we use. Antoinette and I used this program on many occasions before. We found it to be the most consistent program, the most general, a generic program, and it's a statewide program. It does vary as far as income limits and loan limits, county to county, but that's something we kind of know up front. You know, that's one of the number one questions your lender will ask you is, where do you want to live? You know, and why, and whatnot. And then, of course, what is your buying power? That determines where you live. We know the three most important words in real estate, right, Antoinette? Location, 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 right? So here is a look at the program that I like to use. There is a conventional program and there is an FHA program. 95% of the time, you guys, I'm using FHA. It's just way more lenient. It's a loan for the people. You'll find that a seller may not be as interested in your FHA loan as they are your conventional loan, even though most loans are FHA loans, so don't worry about that kicking you out of a deal. But one of the reasons they feel that way is because FHA will scrutinize the property harder than the conventional loan. You know, is the water on is not enough for FHA. They want to know if the water pressure is sufficient. You know, a crack in the seam of the driveway walking into the home is not so much a problem for the conventional house, but for the FHA lender, it is, because we want to make sure that our buyers, our new homeowners are safe and that everything is working as it should be. So here's a brief description of how you get into the program. You got to be a first-time home buyer. Okay, to qualify for the Cal HFA government loan, all borrowers, including borrowers, must reside in the home and meet the definition as a first-time home buyer. And then the second bullet there tells us that a person must not have owned a home within the past 3 years. I'm going kind of fast through this because, as I mentioned, I want you to just get the basis to this, take notice of the website if you wanted to look at the information closer yourself, or do yourself a favor and just contact me. I know all this information like the back of my hand. One thing Antoinette and I were discussing before the recording is who can be on the loan. A lot of times, you guys, people will crash and burn and not be able to get on the loan themselves. My antidote to that is let's fix you, okay? We can do a certain level of credit repair. We can advise financially what debt should be paid off and whatnot. But bringing in another person, as you can see, the program frowns on it. Okay, you got non-occupant, co-borrowers not allowed, non-occupant co-signers not allowed. It really is looking to put you and your significant other, husband, wife, whatever, and children into the home in your name. And as soon as we get off of that beaten path, we find it's pretty tough uphill traveling at that point. So this is something you want to consider if you're not there yet. And by the way, please don't disqualify yourself. I get that all the time, right? Someone saying I can't do it, and they've not even let me look at their situation. Please don't decline yourself. Let me do it. Okay, moving on. All right, so now we look at more specifics of the program. Of course, there's income requirements, right? You can't give, what's his name? Warren Buffett does not apply, will not be approved for this program. Neither will your best friend, Mr. Donald Trump. However, someone like you and I are probably in there, no problem, right? So I'm going to share with you the income limits in a little while, but they're very aggressive. And again, I mentioned earlier, there are several programs available, but this is why I use this program. This is one of the reasons I use this program. The DTI issue is 43%. DTI is a fancy term that says how much can you let the guy borrow. You know, a DTI is a debt to income ratio. 50% DTI for a guy that makes $5,000 a month is what? $2,500, right? $2,500. If a person has a $2,500 maximum DTI, that means that's how much money he can have going out, period, okay? It's not just his home loan. He can't have a $2,500 home loan. If he's got a $400 car payment, then he can only have a $2,100 home loan. So we have to remember that, and that's my job to do. But I bring it up because, you know, a lot of folks are shopping and they see the beautiful cathedral. It's a $600,000 house. You guys, that's about a $3,500, $3,600 mortgage, okay? And so you got to make sure some of this stuff you can do on your own. You know, just to get on another soapbox, very rarely are you going to be declined. Antoinette and I have never started a transaction that we couldn't finish, because guess what? I'm not going to put you into it if I can't complete the loan. Sorry, guys, I'm a 100% commission-only job, and it doesn't make sense for me to waste time with that. So if you were to come to me and you wanted the $600,000 home, and you did make $60,000 a year, I would discourage you. I would say that's not going to happen. Your numbers don't add up. No one's going to. That's your second purchase, right? That's after you've built up equity in the home and you've had this down payment money and things like that, that you would have essentially the same loan amount, even though you bought this $600,000 house. Why? Because you moved out of the $400,000 house with a $200,000 down payment now because of the equity and whatnot, and you were able to put it down. So basically, you went from apples to apples. So we get there. So just be patient and understand that these rules came to be when the market crashed. And you know what they were saying to banks? They were saying, you guys should have never loaned her the money anyway. What are you doing giving her a $3,500 mortgage when her income was $2,500 a month? That was a bad idea to begin with. So they were really scrutinized by that, okay? Quick scores. Please tell me what your Credit Karma score is. I can't do it. I just don't want to hear it. And people go, why not? Why not? Credit Karma is there so that you log on and look at the advertisements. It's very, I'm 21 years. I know Credit Karma hasn't been around 21 years. I've never seen a Credit Karma credit score match the one I pull, because I am the real deal. TransUnion, Equifax, and Experian. The actual scores, that's what you're going to get. Every collection you've ever had, every bankruptcy you've ever had, it's all going to come from me, because I am going to be lending you hundreds of thousands of dollars, and Credit Karma isn't. So I don't mind it, and I'm going to bite my own tongue, because I'll ask you that. I'll call when we speak. I'll say, well, what did Credit Karma say? And you tell me Credit Karma said 640. Okay, that's a good start. Okay, because you're going to be approximately that, but you won't be 640 when I run it. Sorry. All right. So the minimum score for these programs is 660. You're not there. You got to let me know, because I'm going to give you a free credit report, and I'll tell you what you need to do to get there. It's been insightful for me to run people's credit, and sometimes a guy might need a year. I'm sorry, he'll need 12 months of on-time payments to get him to the score that he has. That was very discouraging for me. But the person I told that to was super excited. They were like, really? In 1 year I can own a home? Isn't that incredible? That's just an amazing thing to me. You know, I was looking at that glass as half empty, and then to the person receiving the information, it was half full. Because why? Because they were wandering around. They had no idea when they could buy a home. And just by giving them a date, they were excited. So, of course, I became excited, and we were excited together. So you got to let me give you the free credit report, and I'll get you started, and we'll see where you are with the credit report, credit score. And if you're not there, then we'll get you there. All right. Getting a little deep on you here. You're going to have 3 loans, okay, to do down payment assistance. You're going to have an FHA loan, the big loan I talked about that was buyer friendly. Then you're going to have a My Home loan. That's what's on the screen in front of you now. And then you're going to have a zip loan. I don't even have the zip loan information on here. You know why? Because it's called a zip loan because it's 0 interest. Now, the zip loan and this loan are deferred payment loans. You see it there in the first line? I was supposed to be using my toys here. That's right, Antoinette. I won't do it now. All right, it's deferred payment, that top line. It says deferred. What does that mean? That means that you don't make a payment on this down payment assistance loan for 30 years, okay? You get to, here's the concept. Richard got the loan today. Give him 30 years, because he has a 30-year fixed loan, to pay off his big loan, and then we'll start asking him for money, okay? We won't, you know, my father calls it break a man's leg and then teach him about the way he walks. We won't do that to him. We will let him go ahead and finish his obligation with the big one. But finances, they're an interesting little slippery slope, as they say. Unless you sell or refinance the house, at which time these guys want to be paid back. You see, will you keep that home for 30 years? Probably not. I mean, you got $100,000 of equity. Don't go get a car loan, get a home equity loan, okay? Then you can write the interest off, hello. Or you'll have Antoinette and I bugging you every 5 and 3 years anyway, saying, hey, it's time to upgrade. It's time that Richard's gonna be saying, if you don't wanna sell this house and get a bigger house with Antoinette, then at least let me refinance the house you're in, get rid of your PMI, mortgage insurance, and get you a lower payment. No way you're staying in 30 years. They know that. That's why this program flourishes, right? All right, you can get down into the participating lenders. Duh, obviously I am. And the eligible buyers, that goes consistent with what I was giving you guys earlier when we first opened up talking about down payment assistance. Same thing, most not have owned a home in the last 3 years. And that's an interesting point too, by the way. My bankrupt people, my foreclosed people from back in 2006 and 7 and 8 when things were bad, we don't see that anymore. You are free to, what does it say? You're now free to move around the cabin. You are now free to apply for a home loan again. You're the only ones holding that against yourself, right? So keep that in mind. All is forgiven. It was such a bad situation that everybody, you know, had some negative annotations from it. All right, we talked about income limits. I thought I'd share it with you. Constantly, I'm being asked, do I know about this program? Do I know about this program? Public education. My biggest claim to fame is Coach Carter, because I graduated from Richmond High. And so, no, I don't know about those programs. You know, as Antoinette, pastor of church, and people are always giving me external things to consider, and I don't encourage that. I only encourage to follow what I believe, all right? So with that concept and mindset, those other programs, this is one of the things I found. When I was new in the lending business, and I did try to study all of these programs, what I found is that most of them had very, very low income limits. And then if you're going to give a guy a low income limit, you remember DTI, debt to income ratios, they had very low debt to DTI things too. And so you see that was a double negative. You can't make very much money, and then we won't let you have a very high percentage of the money you make. Therefore, I threw all those out and I go forward with this program. So here's a quick look at a couple of the, a few of the popular locations. Alameda County is, of course, anything Oakland, right? Hayward, all that way. Contra Costa County, me and Antoinette's stomping grounds for sure, talking about the Oakleys, the Brentwoods, the Pittsburghs, the Antioch. Sacramento County is a big county. Some folks are leaking out that way, and I added San Joaquin just to bring in the Stockton, Modesto type folks, and then Solano County, it kind of brings into play your Vacaville's and your, what else? Fairfield and things like that. So we want to consider that. Almost finished, you guys. Homebuyer education is mandatory for both programs, okay? It's a $99. Make sure you do this one too, because I had a person once that did one on their own and didn't use this link, and it was not accepted by Cal HFA. And so use this one, it's easier. This one, you don't have to go to a location. You can do it online. You can start and stop as often as you want. And at the end of it, they give you a certificate, which is mandatory that I received to finish your transaction. So I was laughing about it with Antoinette because I used the analogy of it being a dental appointment, because it doesn't sound fun to me. But then another aha moment for me was the response I was getting from the people that took it, who said they found it very educational and enjoyed it very much. Well, good for you. I still think it's a dental appointment. All right, I'm switching up here. I don't know, Antoinette, we will hold our questions till the end. I can see you. You can just nod. All right. Okay, I didn't know if you wanted me to pause because I'm between programs.
No, this is good stuff. This is good.
Okay, good. All right, perfect. We are rolling then. I'm trying to make this fast, and it's a recording, so put me on slow mode if I'm going too fast. All right. All right, now we're talking about the Welcome Home Funding Program. Home Funded is what it's called, right? And it's a great program in that it's an internal program. It's not a, hey, Bank of America, I want to use your home funded. Bank of America is going to be like, excuse me? Wells Fargo, excuse me? Chase, excuse me? Your local lender, you know, ABC Mortgage Company, excuse me? No, no, no. This is a CMG Financial is our parent company. The owner, Chris George, is the past president of mortgage banking. Not a specific area. I said mortgage banking, right? Okay, well, this guy was way up there. And so he basically has bent the rules, and he's gone with this in-house program and basically has pushed the envelope as far as he can. The program is different because if I wanted you to get a gift from a family member, and remember, you know, we're talking about if you need money or not. You don't really need any money, okay? But you need to produce some money. Now, if you produce the money as a gift, these are the guidelines that you would have to follow, right? Now, last point I'll make is that I want you, if you're going to research the data and the information I'm giving you, please research it from a legitimate source. Don't research it from Golden One Credit Union. Please don't research it from Bank of America. Don't research it from whatever Joe Blow Mortgage Company. Research it from the people that give us permission to do loans, which is FHA. Okay, there's their website. There it is. You got it there. Check it out. Because it doesn't matter what Richard says the description of a gift is. It doesn't matter what the other banks say. It only matters what FHA says. And this is why I intentionally put their version of a gift. In order for funds to be considered a gift, there must be no expected or implied repayment of the funds to the donor by the borrower. It's simple, right? I'm going to give you a gift letter, and I used Antoinette 9, my previous example. Antoinette's going to gift Richard some money. So the gift letter will say, I, Antoinette, gift Richard $10,000 with no expectation of ever being repaid. That's all the same. So we're going to keep sure that we got our ducks in a row. And just to go a little deeper on you, the reason we did that is because we don't want Richard to come back later and say he can't pay his mortgage because he had to pay Antoinette. And we'll be able to produce that document and say, Antoinette said on this letter, you didn't have to pay her back. So give me my money. All right, moving on. All right, my home funded program. Great program, right? This is some internal information. Shh, don't tell anybody. All right. It's straightforward. Look, there's 1, 2, 3, 4 bullet points, right? In a nutshell, you create an account. I assist you I'll facilitate that for you and help you get the account set up. I set up the account, you set up the account as the buyer, and we can just put money into it. That's how it works. And now they look at Richard's account, and Richard's account has $25,000 in it. And we're like, whoa, let's go. We now use that money for the purchase of a home. I think, as you can see, you need to be a first-time home buyer, as defined by Fannie Mae, and I take care of that for you. I go back to Antoinette 9, never ever not completing a deal, right? I don't put you in if we can't finish, you guys. So don't worry about looking up what Fannie Mae calls you a home buyer. If you're in the point where you're in contract in 30 days from getting your home, the keys to your new home, then you're eligible. We'll take care of that. All right, so there's my home buyer education again. Remember the online thing, and I said make sure you use it. Let's use that link and let's get that. You see it underlined and in bold. They want it prior to the purchase contract being signed. Can't do that. I'm going to do that later. And then here's another level for the home funded program that obviously we only offer the program at my company, number one. So no one else can do this, but I don't know why. We'll call it grace and mercy, I guess, that they've added this caveat now, that they're going to give you $2 for every dollar you raise in the program. That's kind of cool. Antoinette and I were doing the math earlier. It's probably going to be the $1,500. We were doing the math. If it was a $400,000 house, 1% of that is $4,000, right? So you're probably not going to get the 1%. You'll probably be maxing out at the $1,500, but that's kind of cool, right? And so really, if you only need to do the $750 on your own to get to the $1,500, right? So that's kind of cool. All right. So then they tell you that the grant funds can only be applied to non-reoccurring closing costs. If closing costs are fully paid by the seller or interested party, then the grant funds can be applied toward discount points for the borrower to get a lower rate. You see, you're never going to lose money here, okay? This is called buying down the rate. Today, I put someone at 3.250, 30 years fixed, right? It cost them 1 point. It cost them $4,000, right? If that person had an excess of $4,000, we would have lowered the rate even below 3.250. So that's what that little line, that last bullet point means. This is a very small example of how the program works, okay? It's an internal program. My company's the only one that offers it. And so what I'm really wanting you to do, you and your family, and so that you can fully understand it and we get you started on it. All right, Antoinette, I am going to throw the ball back to you.
Well, Richard, I've been really good over here keeping all my questions to myself. I was going to get, who was that guy on Welcome Back, Carter? Ooh.
Horseshack.
I was about to get into my Horseshack thing. So.
Okay.
But that was a really, really informative explanation of your programs. And I want to ask a couple of questions that came up while I was listening to you. First of all, that's a very impressive program that Home Funded
It
with
is.
gift funds. And I just want to reiterate, you had gift up there on the screen, but I just want folks to know that this is a grant. This is free money, right?
That's right.
It's not a first, second, or third. And
No.
was this program created because I think I heard you say at the beginning that lenders, smart people realize that not everyone can, that have all the money, and it's hard to get a loan, and to get this crowdsourcing, since everyone's in the habit of, going to GoFundMe, and, I thought that was really smart and a way to kind of plug into how people socialize and help each other out, this crowdsourcing. So the grant, I think, is impressive, and I just wanted to point that out. And is this something that a lot of companies are doing?
It is not. And circling back to that comment of the gift, and people will say, what they can and can't do for you when you're trying to buy a home. But one thing you can do is you can help me out financially. You can give me some money. You can gift me some money. So the crowdfunding aspect gives us that vehicle. You see what I mean? So Antoinette, okay, you're busy and you got life going on, but you said you'd help me. And so I don't need your name on a piece of paper. I don't need you to commit to the 30-year thing that I'm committing to. But if you could help me with some money, here's a vehicle for it with no questions asked. You see what I mean? And so that's kind of my my response to the gift part of it. What was the second question you asked me? I'm sorry.
Well, I hadn't yet, but my second question was about the home buyer education. It looked like 8 hours. Is that an 8 hours that they have to sit through continuously, or is it something that they can start and stop?
You're correct. Starting and stopping is the option. 40 minutes a day or whatever is no problem. The answer is you can start and stop, but I'll go back to my comment about folks enjoying it. And some people, like a good book, will start it and won't stop it. So I think it's very encouraging to hear that from people who have previously taken it.
I think the more education a person can get can help with their, set up their expectations throughout the transaction, and things. Even though they're no experts in buying a house, most of them will be first-time home buyers by Fannie Mae's definition. So I thought it was great that you put the link up there for them to look at on their own. But in all actuality, even if we clicked on a link, if I didn't work in the real estate industry, and I certainly don't work in lending, I would go and I would read this stuff, but I would still want someone to help me sort it all out. Like, I read this, but what does it really mean? And I'm glad that you would be available to do that. And if you could put your contact information up there, that would be great, so people can see how to reach you.
Absolutely, I will. And, Antoinette, I want to say at least 6 months, but I want to say that those programs are available. I'm sorry, that certificate is available for 1 year. And so if a person just said, hey, I want to go and see what it looks like, they could. They could do that now and take the class right now. Remember, I need it before the purchase contract anyway. And so the person could go in now just to satisfy their curiosity and take the class as we speak.
Well, I'm glad you mentioned that. I'm glad you mentioned that, because I was going to ask you, how long is that certificate good for?
Yes, 6 to 12 months. I'll verify that for you guys at another time.
Okay. Well, Richard, I just want to say again, thank you for this discussion. It was really great. I learned a lot, and I'm really excited about sharing this information with my clients and my pipeline. This is really encouraging, and I think that anyone thinking about buying a house right now knows that they can set themselves up for success. If they've saved enough, if they've got a family member who can help them, and then involve social media and with the crowdfunding, they set themselves up to be successful, and get over any humps along the way that might come up during the transaction. So I think this is really great, and thank you.
You're welcome. Thank you for having me.
And before I let you go, I just want to share my contact information here. There's Richard's again. I want to share my information. If you like what you heard today, do know that I will present additional information, and I'll have Richard back. And at that time, Richard can share with you some additional information. Again, my name is Antoinette Sullivan, and I'm a realtor with Better Homes and Gardens Real Estate here in Antioch. My phone number is 510-827-7432, and there's my contact information there. And there's my friend again. And also, in the future, we'll be coming together to talk about home ownership. And I like to use Obama's slogan, "Yes, you can," because it's just plain and simple. Yes, you can. We're going to talk about what lenders look for in potential borrowers, and and wealth creation around real estate. Because I always like to say, owning real estate not only gives you tax benefits, it creates an atmosphere of security. It creates roots and permanence in the community. And it's just, you don't want to find yourself at the end of the road having to move because the landlord wants to sell for whatever the reason. And so I'd like to thank you for watching. And again, Richard, can you throw your contact information out there? Just tell them your phone number and how to reach you.
Oh yeah, absolutely. I am available 24/7. I leave my phone downstairs intentionally when I go to bed, but if I'm up late and you catch me, I'm probably going to answer. Again, just emphasizing the 21 years of experience, and be able to help you in any capacity is my goal. So be sure and reach out to me again. 925-565-1146 is my phone number. We've shared it a couple of times, and it's a recording, so I'm not going to put it back up. But I just wanted to conclude by saying thank you, Antoinette. And it's just been a joy working with you, not just for this recording, but all of the wonderful people that we put into homes. Absolutely. It's just been a of emotion, and all of them, to a person, have just been completely satisfied with us. And I know that we'll continue to do great business together.
Yeah, we make a great team. All right, well, thank you. And that concludes this discussion. I'll see you around. Stay safe and think real estate. Bye-bye.
That's right.